Hello, I'm Jared Nelson from the Investing Channel, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. One of the most anticipated IPOs this year finally reached investors last week, Roblox. And just demonstrating how high-profile this listing has been, within a short period it found itself at the top end of our Trackstar IQ search tracking rankings. By selling existing shares to the public via direct listing, the gaming firm achieved a fantastic valuation of $38 billion based on its latest closing price of $69.70. Not bad for a 17-year-old loss-making company in a highly competitive sector. Just a few weeks ago, in January, Roblox was valued at $29.5 billion in a fundraising exercise, and 12 months ago, a mere $4 billion. The catalyst that accelerated Roblox's progress was the pandemic, and while a lot of companies struggled, Roblox thrived. Its internet-based games relieved the boredom suffered by children and young adults as traveling and schooling were drastically curtailed. According to Roblox's prospectus, about 36 million users engaged its platform daily last year. This is up from 12 million in 2018. In addition, Roblox says it has about 7 million active developers. Inside the Roblox economy, there is this currency that players can buy called Robux. Typically, you acquire money with fiat money, such as US dollars, and spend it in the Roblox system. In 2020, players spent about $1.9 billion on buying Robux. Developers can also earn Robux and exchange it back to real-world money via the Developer Exchange Program. Out of the $1.9 billion pot, developers and creators earned $329 million. Roblox's 2020 revenue from these Robux purchases and game subscriptions totaled $923 million. The company, however, did not make a profit, and its annual loss is about $253 million. So why is the market placing such a large valuation on Roblox, as compared to its income and profits? One important factor: growth. Investors these days place a huge premium on high-growth companies. Roblox is an international company with a large potential, and its users are growing by leaps and bounds. The world is still in a lockdown of sorts, so more gamers are expected to use its platform. Naturally, investors overlook Roblox's temporary financial losses. In the UK, a survey was done recently to see how youngsters spent their pocket money in 2020. At the top of the list, Roblox. But the question for investors now is whether they should buy the stock at current prices. Yes, if you believe in Roblox and its ability to sustain user growth in the near future. The Roblox metaverse concept is groundbreaking and may attract more players into its fold. Well, Cathie Wood certainly believes in the Roblox story and has bought 500,000 shares for her ARK Next Generation Internet ETF. However, buying this late in the game entails a lot of risk. The first one is size. Roblox is currently valued at $40 billion, a sum almost as large as Electronic Arts, the second largest gaming company in the US. And after seeing a tenfold in value over the last 12 months, Roblox is no longer the cheap growth stock that it once was. Of course, bullish investors may say that Roblox can still match Activision Blizzard's value at $72 billion. But even at that highly optimistic valuation, investors will only generate an 80 to 100% return from current prices. The second risk concerns Roblox's user growth. The rate of growth may decelerate faster than expected in 2021. Remember that the COVID vaccination program is speeding ahead in many countries right now. A normalization of the world economy will begin sometime in the summer. When this happens, young adults are likely to spend more time outside than in front of screens. This means Roblox's projected growth rate may fall short. In fact, investors are already piling into pandemic losers, such as airlines and cruises, and dumping pandemic winners, like Zoom. Roblox is likely to suffer from this rotation. Another risk comes from Roblox's financials, in that Roblox is still unprofitable. Despite all the above, Roblox is potentially a large and important gaming stock. So, how should investors play it? The first tactic is to wait for a pullback before buying it. A lot of gaming stocks appear to have lost their upward momentum, such as Zynga, so easing into the stock would be a preferred strategy. The second choice is to buy funds that have Roblox in their portfolios, such as ARK Next Gen Internet ETF. This is a diversified approach. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.